Okay, it looks like we are recording. I'm going to pause it for just a moment.
Thanks.
Welcome to Escrow SOS, navigating the hazards that can sink your transaction. Most of our crew is on deck today, so I would like to give a couple of introductions. I'm Jennifer Shepard. I'm the sales manager here for Chicago Title, Fresno, Madera. And with me are Linda Federico Johnson,
Good morning, everyone.
Brad Fisher,
Ahoy.
Delilah Mendoza.
Good morning.
Our crew member, Erin Rowe, is on vacation, but will be available if you have questions. She'll be back in the office next week. And in the meantime, you can reach out to me or her counterparts with any questions that you might have. We also want to just say hello to our Chicago Title guests that have joined the call, Rochelle Burton and Brittany Frost and Sid Muramoto from the Oakhurst team. And again, the information that Anna is sharing today is something that any escrow officer or sales member at Chicago Title is happy to assist you with. So with that, I'm going to introduce Anna Getman. She is a fantastic escrow officer. She is also doing a lot of training for us and is always willing to teach a class and help people learn about the intricacies that are in escrow and title today. It continues to evolve and new things are happening all the time. And so this is the first time that we are doing this class because we've got a lot of new information to share with you. So with that, I'm going to share my screen.
And don't be offended if I mute you, because if I hear you speak, I might mute you. And if you have a question, you can put it in the chat and we'll get Anna's attention to answer that question.
Yes, we'll
We do
try
have a
to
secret
answer.
guest over here. I don't know if you can see him if I turn my camera, but one of our agents, they're moving their office today. So he came in here to hang out with me. So I have a secret spot for him.
Okay, Zoom did some new things, so I'm gonna see. Let me go back. Okay, can everybody see the Escrow SOS screen?
You're good, Jen.
Yes.
Fantastic. Anna, sail away.
Good morning, everybody. Again, thank you so much for taking time and investing in yourself and joining us here at Chicago Title. I've been in the business for over 28 years, and I actually am a young in the business. We've gotten some fantastic escrow, not senior, but experienced escrow officers. And so even being in the business for 28 years, I still see new stuff come across my desk. With our ever-changing market, the ever-changing industry, these classes are repeated yearly, but I have to tell you, it's very rare that I'm covering the same subjects because things do come up. New situations come up, new laws get introduced that it's our fiduciary duty to oblige, to make sure that we are staying on top of all these new laws that come up. It seems like yearly. So a lot of these slides, I'm going to try to use situations that have come across. My fellow escrow peeps, if you have something interesting to contribute, I do welcome. Again, like I said, we have various desks here, and various situations do come across our desks. So having said that, we're going to start off with some, spot the warning signals, so on and so forth, outmaneuvering the hidden hazards, and save the sale. We do have something new that just began this past Monday, where we identify absentee owners, sellers in the area and out of the area, because fraud is high everywhere we go, whether it's wire fraud, property, fraud, selling the property from under the sellers. So what we were doing, I don't know if you are familiar with what we used to have to identify our sellers to make sure they are who they say they are and they are intending on selling their property. We used to use this system called MyTech. Well, that has since gone away, and we have replaced it with Clear. Clear is much more user-friendly for the consumer, in my opinion. Now, the biggest question out there is if someone has already registered with Clear, would that work? Yes, it does work. It's a little bit more simpler for those consumers that have already gone through the process of registering through Clear. So we are using that now to identify and verify our absentee owners to make sure that they are who they say they are, and they do intend to sell their property. In regards to having a smooth escrow, that is our goal. Our goal is to make sure that every I is dotted, every T is crossed, and we are here to make sure that everybody is doing what they said they were going to do per the contract, all parties involved. So having said that, I do want to go through some warning signs hiding, in your preliminary title report, because that is where your smooth transaction begins. If you know what's ahead, to have some smooth sailing, what's ahead on the horizon, on the ocean front, learning we don't expect you to know everything in the prelim, but learning how to read the prelim to identify, your bumps in the road, whatever the case may be, is a good strategy to have to make sure that you have a smooth escrow. Some of the things that you want to be aware of, these are some of them. I'm not going to go through all of them. I'm going to highlight a few of them that we have seen in the recent past. But for example, what we are seeing right now is solar. Solar is always been, it's been here for years. And I just don't understand why it always becomes a problem. But one of the things that have stood out is solar companies have come and gone. And when they have gone and we are trying to clear solar, that's an issue. So we need to make sure that we get as much information upfront from the sellers about who they are communicating with in regards to their solar system if it is not owned. Now, that's another thing. If you have gone out on a listing and you have successfully obtained that listing and you see solar panels on the roof, but yet you do not see any solar exceptions on the preliminary title report. And the preliminary title report, that is something that you need to be aware of. You need to ask a question. You need to contact escrow, make a mention, because again, we are human. We do make mistakes. We could miss something that should be reflected on the preliminary title report. But one thing I failed to mention at the very beginning is communication. And I'm going to mention it throughout this class because that is also a very important key to have on a smooth transaction. So go ahead and communicate that with your escrow unit and let them know that I see solar panels on the roof, but I don't see a solar exception. It very well could not be there because if the seller does indeed own the solar, it's not going to be reflected on the preliminary title report. But there's various ways solar can be reflected on the title report, whether it's in a solar agreement, a UCC, which is a financing statement, and so on and so forth. So that is one of the things that is of many red flags. Another thing is improper execution of documents, and or if you see a loan that your seller is saying is paid off, and we are reflecting a substitution of trustee and full reconveyance, it's because it was done kind of not suspiciously, but because we have to deliver clear title to the buyer. If there's not a transaction that has followed that that has preceded that reconveyance, it's very rare that unless and so somebody has come into inheritance or won the lottery, that they paid off such a substantial loan. We just need to verify that indeed is a valid reconveyance, because again, there is fraudulent activity out there that people have reconveyance recorded and it truly isn't paid for. When I say improper execution of documents, that also can cover uninsured deeds. People want to add their mom, add their daughter, their son, their aunt, their uncle, their grandparents want to add their grandchildren. And they go ahead and they reach out to not a title company or escrow company. They reach out to maybe a paralegal, a document service, and they do this on their own and get it recorded on their own. Now, we're not saying that that is not a legal transfer. We just need to verify that that transfer was, valid, that the parties involved had the intention to do so, and it wasn't insured. And in order for us to continue where there isn't a gap in title coverage and to ensure the buyer receives clear title, we have to have an uninsured deed affidavit executed by the grantor of that document. And that does need to be notarized with our contracted notaries. It's one simple document. And so when these parties are no longer around or unreachable, that's when it becomes a situation and your smooth transaction becomes a little bumpy. So there's various red flags as you see, but those are the two big ones that I do want to, that come up often on our preliminary title reports. So the dangers below, the hidden closing hazards lurking beneath the surface. So we've gone through the prelim, we've identified red flags, but then also you've provided questions and we've given you answers on the preliminary title report. And some of those answers are these old deeds of trust, as I mentioned, the uninsured deeds. So we would need the uninsured deed affidavit. And again, I mentioned missing people, whether they were a grantor on a previous grant deed or whether they're still on title. That can be an issue where maybe there is some inheritance and the vesting is held through a final distribution from the court, and there was various family members that were awarded title, and one of those family members goes missing or just that are not locatable. Divorce situations. A lot of people have a misconception, whether they're buyers or sellers, that if they're separated or they're going through a divorce, they don't have to deal with this ex-spouse anymore. And unfortunately, that is not true unless the divorce is final, signed off by a judge. We definitely still need to deal with that soon-to-be ex-spouse. And then power of attorney documents. They have to be executed within the last 2 years. They have to have a valid reason to use the power of attorney. And if there's any kind of medical issue that the power of attorney is being used for, they have to be backed up by a doctor's note. Depending on the medical condition, title can require 1 doctor's note, and certain conditions, title requires 2. So these are the type of things that could be a situation. I don't like to say issues because that's a negative tone, because everything is figure outable. That's my slogan I love to use. But there are challenges that we are here to help you get through. And so these are the type of things that you want to take note on the back of your mind, that if you get a preliminary title report and some of these kind of pop up on your report, ask the questions. Ask what it's going to take to clear title. Ask your clients, hey, title has discovered these things. Do you have information that we can provide to them to help out to get to the finish line? So there's many a times where if a person goes missing, we have a database that we can look through for a missing person. However, we need like their full name, their last known address, and any additional information that you could have for that missing person. And then we do have a database that we can try to locate them. I've had escrows where we have located a missing person, and most of the time it has worked out because they just go on with their life, not even realizing that there's property back if they left the state or whatever the case may be. And they just don't realize that there's, unresolved, property issues. And I've had escrows that are successfully closed where we've located that person and they have cooperated. Now, there are escrows that we deal with that we don't have someone that's cooperating, and unfortunately we are at a standstill. In order to be able to move forward, they have to cooperate. I've had an escrow where the family members have taken that individual to court and the court has ordered them to cooperate. So there's hardly ever this is just not going to happen. It's very rare. So we all do what we can do to make sure that we take care of all these situations in a timely manner. But some things take a little longer than most. Okay.
And we have a question in the chat, Anna, that kind of goes back to the first slide, but it says, how can someone do a quit claim into the name of their trust and get it insured? Because they typically aren't doing that through escrow. So if you could just kind of summarize some best practices for people who are creating a trust and moving their property into it. It does not always interfere with title, but we do check it. So if you could just take a moment to kind of share your ideas on that.
So what oftentimes, not all title companies, but most, if they see a deed that goes from an individual into that individual's trust and it was prepared, recorded, prepared, signed, notarized, and recorded by that family's trust attorney, we don't, we see that as a valid transfer that we don't have to necessarily validate. So if they are being done with the family's trust attorney, that would be the ideal. Now that doesn't happen sometimes. Sometimes people go to a paralegal or document services. Since it's going from the individual to their trust, the uninsured deed affidavit would just be included into that seller's package to execute that that they intended on that deed to be signed and recorded to put it into the trust. And on top of that, we will be requesting from the sellers a copy of the trust agreement to ensure that they did have, just to align, to make sure all the information that it went from the individual to the trust, that it was done appropriately and correctly, that the trust name was transcribed correctly, that there wasn't missing information. Sometimes when people go to a paralegal, they fail to include the date that the trust was created in the vesting title. It's one of the items that we like to see. It's not detrimental. It's not something that it's dead in the water type situation. But it's something that we like to see because as time goes on and amendments are made to a trust, those amendments have dates as well. So if a transaction or if a property is being sold after a trust has been created years and years ago, and that trust has had various changes, whether it was trustees, successor trustees, beneficiaries, so on and so forth, we like to follow the paper trail, and the dates really help us. So I hope that answers that question.
I believe it does. The other question aligned with that is they mentioned using a quitclaim deed. Is that the recommended deed type for those types of transfers, or does title prefer to see a different type of deed used in those trust transfers?
Title does not like the quitclaim deeds because it doesn't fully divest the grantor's interest. Quitclaim deeds are very rarely used. So title would like to see an actual grant deed, taking it from the individual name into the trust. So if you are coming across a paralegal, I don't often see trust attorneys using quitclaims, but if you are coming across that, that is not, again, you're not dead in the water, but that uninsured deed affidavit is something that closes that gap for us. So we don't recommend quitclaim deeds. Title does not like to see them because, again, they don't and do the entire divesting of the grantor into the trust.
Okay, perfect. Moving on.
When to stop and investigate before moving forward, drop that anchor. Okay, so dropping that anchor, when you go through your prelim and you discover some preliminary title report items that just don't look like the normal items, you have questions, pick up the phone, send us a quick email saying, I saw the prelim. There's a few things that I have questions about. I'm not sure if they're going to be issues for us. Can we have a conversation, or can you shoot me back an email to let me know about these items? We're happy to do so. We can let you know that they're normal items because, again, that things change, things come up yearly, monthly, and there's sometimes that things get recorded with the county that pop up on our prelim that is new to us. So, yes, prelim items, again, what I was talking about earlier, marital status, not only the divorce situation, but it seems like we get it a few times a month where a buyer will either one say that they're not married when they're truly married, or that they are married, but they are married, not legally, but they see themselves as married, or they're married, according to, if they lived in Mexico and they were married, there, but not really married legally there, but they still feel like they're married. So there are various different situations where the marital status becomes a little bit of a question. I've seen where somebody has said that they weren't married, and they truly were. And so they were, it came up through the application of the loan because, of course, with the credit, when you have a credit ran, and if you're married, there's, that stuff comes up. So that could be an issue where you need to stop and we need to figure out in what direction. And so some people don't want their spouse to be involved, and so they say they're not married, and it's really just there's just two documents: the spousal deed, and then our instructions saying that they understand that they're divesting any interest to the transaction. Probate paper, court orders, trust docs. I recently had one where there was 5 siblings, and there was a probate done and put the title in all 5 siblings. 4 wanted to sell. The probate didn't specify that they had to sell. 4 of the 5 siblings were ready to sell, executed the contract, and the 5th sibling said, no, I'm not going to do it. So these are the type of things that, that you can come up with, like, make sure when you go to that listing, everybody that is on title is part of your listing. This is another thing that happens, change in buyer. So we often get at the 11th hour, or when we ask, or the lender asks to update our documents, they ask to either add or take away a buyer. And so we can't just arbitrarily do that. We have to have documentation, verifying that all the parties involved are understanding that now we are removing a buyer that was originally on the contract that the seller agreed to sell their home to, or we're adding an additional person to the transaction, again, that was not part of the original contract. It's to no fault of their own, but the lenders are infamous of doing this action either 3/4 of the way of the transaction or right before we're getting loan documents. And it's because, whatever the reasons might be that they had to add or take away due to the loan status, it's not a problem, but we do have to have backup documentation. And I'm not sure if there's a lot of inexperienced real estate agents here, but we as an escrow unit, we do need the fully executed AOAA, which is, I think, is an amendment of something agreement. I can't remember exactly what it is, but it is the document that needs to be executed to make sure that all parties are aware that we're either removing a buyer or adding a buyer. Okay. Also switching lenders. We get this at the beginning. Typically, it's very rare that we'll get it halfway through the transaction or even towards the end of the transaction, but it's something that does happen at the beginning. We'll always check. We get lender requests pretty much 24 to 48 hours from the time that a transaction is fully opened with the buyer. And the reason why I say fully open is because we do get pre-opens where a real estate agent has secured a listing with their listing agreement, and they've asked for a pre-open where we'll pull a preliminary title report to go through all of these things to make sure that we do have a smooth transaction, to discover any issues that we may have. But usually when we get a full transaction where there is a bona fide sale with a buyer, we get a lender request within 24 to 48 hours. Now, those lender requests are just not fees. It's a bundle. It's quite a few documents. It could be up to 15 documents that we are providing the lender, where we're reflecting their information, where we're pretty much, for the lack of better terms, promising them that we're going to insure them as the lender. We're giving them all of their requirements as far as endorsements and all of that good stuff. So it's a good 15, up to 15 documents on top of the fees and stuff. But so you can imagine that we have built a file. And so here we are a couple of days in, and we built a file around this particular lender. And then 2 days later, we're contacted by another lender asking, and that's on the same property, asking for the same set of bundled documents. So we're going to, obviously this is our job and that's what we're here to do, but we're not just going to arbitrarily change the lender. This happens when the buyer is shopping and they really haven't committed to the actual lender. So for example, the scenario that I'm giving you, maybe they didn't commit to that first lender that we provided that bundle of documents to, and they haven't committed to that second lender that is reaching out to us. So if you are representing a buyer, it's best that they communicate that they are still shopping. And then if you can communicate that to the escrow unit to let them know that they might get a few requests, and we just need to know when that buyer has committed to a lender, because various documents do have to be changed, whether if we did all of that for the first lender and the buyer actually did commit to the second lender. Sometimes that second lender is requesting stuff on a rush because they're trying to catch up. They're already in day 4 of the transaction. And so it takes a little bit of time to recreate all that stuff, to wipe out our system, to reload all the new information, loan numbers and lost payee, and it's quite a few documents. So that's one of the things that if you are hearing your buyer not, drop your anchor and say, okay, are you still shopping? We need to know what's going on. Yes, we have a pre-approval for one lender, but we need to know what direction you're going into. Another issue is traveling outside the country when whether it's your buyer or seller. This also becomes an issue if it's your buyer and a power of attorney needs to be used. You can't just arbitrarily use a power of attorney because we have to approve it. And if it's a financial transaction, the lender has to approve it as well. So if either one of your clients, whether it's a buyer or seller, traveling outside the country, please notify the escrow unit that you are working with to make sure that they know this information so they can prepare accordingly. So they can prepare the documents, whether it's a seller, to send them out, in enough time to get them back. If the seller has to sign at a U.S. embassy or consulate, that takes time to get an appointment. That takes time to get it back. And so on and so forth for the buyer as well. It's very rare that you'll have a buyer that's going to execute loan documents out of the country because the embassy or consulate, they're not going to execute a stack of 150 documents with the buyer. They are there to execute a handful or less documents for a seller. Other issues, the ability to execute documents is what I just mentioned, and then holdbacks. Holdbacks has been coming up quite recently. I'm not sure why. I don't know if it's the market. I don't know what's going on out there, but it seems like every other day we're being requested. And this usually kind of comes up towards the end of the transaction when we're almost ready to close. We're being requested to do holdbacks. Depending on the type of holdback, it does have to be approved by the escrow company. And it all depends on the reason for the holdback. If the holdback is granted, it's only be the most that we can do a holdback for is 30 days. Okay. So if that is a situation that you feel like might arise, please communicate that with your escrow unit so they can determine whether it is going to be approved to be a holdback within escrow. And then also you need to make sure if it's a finance transaction that your lender is going to be okay with it.
Hannah, on the ability to execute documents, one of the things that we were alluding to was that you discover possibly midway through the escrow that one of the sellers may not have the mental capacity to actually execute their documents. And that causes a pause in the transaction while you figure out next steps. So what typically are the things that title needs to move that transaction forward?
Grace. Title needs grace. Okay, so we can't control how an individual executes their documents, whether it's due to their mental capacity because they still are aware of what is going on, but they do sign and they maybe have a condition where it causes their signature to be a little bit trembly or a little, not clear. So it's difficult when we come across that situation because, of course, that it's to no fault of that individual or ours. So when that happens, we have to just evaluate the situation. We have to figure out what our best path is to make sure that we are able to submit these documents appropriately through the recorder's office if it's a recordable document. For example, we recently had one where the individual, their handwriting was very unclear, and the dates, the 6 looked like a 0, so it looked like they dated the document, 2020 instead of 2026. So we had to go back to individual and just ask them to clearly, as best to their ability, reprint the date and initial. So when I say grace, it's because when we get the documents back, we review them, and when they come in that condition, we have to make a decision if we're going to return to the customer and ask them to do so, or submit it and see if the recorder is going to be okay with it. It's just hard. It puts us in a tough position because, addressing an individual saying, I can't read your handwriting is a delicate situation. So when that does come up, the escrow unit will reach out to you and say, our documents came back a little bit they're illegible, and we're going to do the best that we can to figure out which route we're going to go. Just so you know, we might reach back out to your client just to ask them to clearly print the date, whatever the case may be. We can't ask them to change their signature, obviously, because that's their legal signature. And that typically isn't an issue. The recorder understands that if that's their legal signature, that's their legal signature. However, they do tend to oversign and maybe go over some print. And then at that point, we will provide a clarification page for the recorder. Okay. Okay, captain's logs, what you need to explore before setting sail. There are a few things, like I said early on, the red flags were the solar panels. You see solar panels, you don't see an agreement. Ask questions. Or guess what? if you bring that information to us, we're going to ask questions of our title searching department saying, hey, did we miss any kind of solar agreement at all? Can you take a, do a relook? Authority to sign, referring back to requesting a copy of the trust agreement. One of the reasons why we could ask for this is sometimes we see self-serving deeds where the property was in a trust and maybe the individual was a successor trustee of that trust and they deeded the property from that trust to themselves. We don't like to see that because that is considered a self-serving deed. So that's just an example of why we would need to request a full, a copy of the trust. Authority to sign also kind of goes into any entities, LLCs, corporations, general partnerships. We need to make sure that who is signing our documents, they do in fact have the authority to sign our documents. We don't want to just have one individual that we were told that that's who signs for the LLC signs, and then come to find out if that LLC mandated for two managers to sign. So that is the reason why we ask for those supporting documents. There are times where people say, I don't have them anymore. I can't find them. Well, unfortunately, we can't move forward until we get something showing the authority to sign. Another thing that we come across is when we are selling or signing sellers and it comes to the disbursement instructions, and we do a really good job a lot of the times when we are communicating with the sellers that we mention to them, and when we see the property is in the trust, we mention to them, now I just want to be clear, you do have a bank account that's in the trust name. And again, we do a pretty good job of mentioning to them, but some banks do take a little bit of time to set up these trust accounts because some sellers, surprisingly enough, do not have a bank account set up in the trust name. And in order for them to receive the funds from escrow at closing, those funds will be in the name of the trust. And most banks will reject either the wire or the check if the bank account is not in the trust name. And then the commission instructions. This has been something that is come up since in the last year or so, when now the buyer is able or willing to pay a portion of the real estate agent's commission. What I'm finding and what I'm seeing this a lot is when it's a finance transaction and the contract states that the seller is willing to pay 2.5%, but the BRBC says up to 3%, and the buyer is now going to be contributing that 0.5%. What I'm finding is that's not being communicated to the buyer's lender. And when we are putting it on, because then we're provided the BRBC not at the beginning of the transaction, and now we are discovering that that buyer is responsible for that 0.5%, and we put it on our master and CD and send it to the lender is like, this wasn't disclosed. So if you are in that situation and you do have a finance transaction, cash transactions, not a big deal, not an issue. If you're in a finance transaction, I encourage you to communicate that to your buyer's lender as soon as possible, because no agent doesn't want to get shorted for all the work that they have done. So having said that, that is an issue that's been coming up quite often, and I would say in the last year. And then also if there's an HOA, we want to tackle that at the beginning. We typically do not order them. We discover them, obviously, if it's a pre-open on the preliminary title report, but we typically do not order them until there's a bona fide sale with a buyer. Communicate, if you are a listing agent, communicate, depending on the contract also as well. But because there are negotiations where the buyer will pay some of the HOA transfer fees or whatever the case may be. But communicate that with your seller, because 90% of our HOA management companies require a prepayment before they will even address our request. And they could be up to $600. And so that is a little shocking when we are reaching out to the seller with a link to prepay for their HOA. It does not cover the transfer fee. When we get the demand in the HOA docs, there's an additional transfer fee. This is just to receive what we have requested. So that's another thing that comes up often. So if you can just communicate with your client that if you're in an HOA, your HOA management company perhaps will be charging a preparation fee, I guess, for the lack of better terms, to let you know what that is called.
And then we do have a quick
Good.
question on what parts of the trust should agents ask their clients for to send on to escrow, and same with an LLC.
The LLC needs the operating agreement and or bylaws, because usually that tells us who the executing members are. As far as the trust, we don't necessarily need the entire trust. They could be quite lengthy. We need the first page, obviously, the portion that names the trustees and or successor trustees, the portion that describes the powers of the trustees and or successor trustees, and the last page that's executed and notarized. So as long as we have those pages, we don't necessarily need the entire, because it's really none of our business what's in the meat and potatoes of that trust. We just need to know those specific items.
And I think she was asking as an agent asking for it. A lot of times they don't want to give it to you either. It's best that they bring it into us and we make a copy of it real quick. It really does work better, don't you think, Anna?
100%.
Yeah.
Because we know what we're looking for. And I know this is my practice. I sit with the client there and they are watching me pull the pages that I need to pull. So they're more comfortable that I'm not taking their binder to the back. So that's how I practice. And I pretty much know that typically I've seen all of our other escrow units, and that's what we typically use, because that's something very private to them. That's something that they have, lined out for, their family and their heirs. And again, it's really none of our business. So the best practice is to bring that binder in. We pull the pages we need in the witness of the trustee, make the copies that we need, and then return it right back to them.
The other thing I was going to comment on, Anna, back when you did that about the commission, I just had a situation happen where the agent was upset at us because they did let us know that they were getting 0.5% from the buyer, but they never told the lender. So it doesn't matter if you tell us, you have to tell that lender, because that borrower did not qualify to give that agent the other 0.5%. So the other agent missed out on the 0.5% and was upset with us, yet the buyer never qualified for the 0.5%. So I wanted to reiterate that it really is important that your lender knows what you're getting from your buyer.
Yes, thank you so much.
You're welcome.
Okay. Great questions, by the way. I love questions, so keep them coming. My favorite thing to do is to teach in person, but when it's in Zoom like this, I love the questions because it gives me a chance to address things that I may not think about addressing. So keep the questions coming. Thank you very much. Safe harbor, again, going back to that, communication is key. I said that at the beginning. Linda reiterated it right now. Just shoot, even if you think it's irrelevant, shoot your escrow unit an email. But I'm not sure if you need to know this, or I'm not sure if it's important, but XYZ. Communicate. If it's not relevant, it's fine. But the more information you provide, the better. The smoother your transaction is going to be. Any changes to the close of escrow date? If you feel that because the lender is ahead of the 8 ball and things are going smoothly, please communicate that with your escrow unit, because they are basing their close of escrow date on that original contract. And the escrow unit processes that file according to that close of escrow date. So, for example, if the seller is on vacation for 2 weeks, for whatever the case may be, and you haven't communicated with the escrow unit that we're closing a week, 2 weeks early, they have not scheduled that seller to execute their documents. So in that case, then we may miss out on an early close because we weren't aware. We calendar our files to sign the seller within a specific time in the transaction, according to that close of escrow date. So if you feel it's gonna get bumped, communicate. Unfortunately, sometimes we hear from the lender that it's an early close. It's best that we hear from the agents, because the agents are communicating with the buyer and seller both. The lender is only communicating with the buyer, and sometimes they're not. Sometimes the lender tries to drive the early close of escrow date, and everybody is caught with their pants down. So that's another little red flag. Any changes to the terms? I just had one yesterday. I got loan documents, and they were fully figured. I was calling the buyer to schedule a signing. Luckily, it was day before yesterday. Luckily, we weren't going to get scheduled to sign till today. And then yesterday, I got a addendum saying that the buyer's agent was going to credit a substantial amount of their commission to the buyer. I turned around and replied to the lender saying, I just received this. We have loan documents. Were you aware of this? And they said no. So any change in terms, don't just notify escrow, notify all parties. So it worked out because I did have some time to rebalance with the lender. They were okay. This lender had a good turnaround time as far as underwriting was concerned. And I was able to get a new CD this morning for 3 o'clock signing this afternoon. So I feel like something like that would have been something like that probably was known well before loan docs. So just any change in terms, or even if you're thinking about it, mention it, even if you're thinking about it. And then also flexibility with signings. Things are going so fast these days. We're 9 times out of 10, these lenders want to sign, fund, and record same day. So if that is the case, just have a conversation with your clients, whether not so much the sellers, because we like to, front load that in a timely manner where we can accommodate their schedule, but more so for the buyers. Again, towards the end of the transaction, it seems like we're on NASCAR, like Indy 500, just trying to get to that checkered flag. My gosh, everything's just going so fast, and everybody wants to close, but yet the buyer isn't flexible in signing the loan documents, and they don't understand the timeline. They don't understand why we're not so much pushing them, but maybe giving them a sense of urgency. And they can't sign till 8 o'clock at night, but yet expect to close the next morning. So those are things that we are asking you is, we try to set expectations with your clients, but you have to understand we are the last party in the transaction that they are actually dealing with. They've dealt with everybody under the sun prior to getting to escrow. Just set some expectations with the buyer saying, due to your work schedule, escrow by all means will accommodate you. But having said that, because there's no flexibility there, it will possibly not go as quickly as we would like, due to the fact that, and it's not their fault, maybe they're in a job where they don't have that flexibility, and that's okay. It's just yin and yang. This can't happen if this doesn't happen type situation. So just set expectations with the clients.
Hey, Anna, we were on a call a couple of weeks ago where national average 45% of the people who have bought property said they did not have a good experience. 45%. That is crazy. So, and it's because probably they were pushed, right? That's push, 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 push. And everybody was pushed. So let's slow down, breathe a little bit. That's my thing, because that makes me sad that 45% of the people who bought property said they were unsatisfied.
Yeah. Well, we're here to change it. Classes like these. Good funds, just basically same rule of thumb. I think a lot of people, if there is anybody new in this call, basically any local credit unions besides Golden One Credit Union, they're not cashier's checks. They're called official checks or bank checks, and we have to wait 3 days before we negotiate any closing on those. Personal checks, obviously, if it's a quick close, we prefer not to get a personal check if it's a quick close, because you have to wait the 10 banking days. So like Noble, EECU, now those funds are good. I'm not saying that they're not. It's just we cannot negotiate any closings the day before we get those. So we always recommend a wire. But Golden One, and the reason why behind that, I know is the bank that it's drawn on. It's not typically drawn on the actual. They are backed by like another bank, and so it's kind of has an extra layer to go through. But in order for us to close on a transaction, we have to have good funds, and there's a list of good funds according to the state of California and their good funds law. Understanding the date down. Now, we've had the smoothest closing ever. The agents reviewed the prelim. They asked the questions. The escrow officer addressed everything. The lender got everything in. The buyer came in to sign. The seller was out of the country but signed early, and we got all the things all lined up, got funds in, release, and then we go to release to record. And so for whatever reason, there is this belief that once the lender funds and we release the record, it goes to the recorder's portal instantaneous. It does not. We have to tell title, okay, now we're in a position to record. Please date down the property. And date down the property meaning, if you look at your preliminary title report, there is a effective date on the first page, and that means is everything in that preliminary title report is good to that date. It's typically 2 weeks from the date that it's being issued, because there's a gap in the time that information is available to us. Any and all title companies, from the time that it's available to us to actually it went on record, and that's just because of databases. Something records today, it's not going to be provided to us until 2 weeks now. So there's a date down. So there's a small period. Now, we have a 30 or 45-day escrow. We have to date it down to capture that time frame that we didn't have access to, and any time frame through the life of the escrow. So we want to make sure nobody went down to the recorder's office and filed a judgment or filed a claim or a new child support against the seller or whatever the case may be. We have to make sure that we are in a good position that we can give clear title insurance. And so that has to happen. Now, it's not a long process by no means, but if you get a phone call from your escrow officer and said something came up when we went to release it, that doesn't necessarily mean we missed it. It's just something was recorded from the time, through the life of the escrow. So, but if the date down is clear, then that gets pushed to the recorder's portal, and we're good to go. Now, prior to that whole situation, when a transaction is financed, when the docs go back and the lender reviews it, there's something called funding conditions. They're requiring us to submit documentation to fulfill their requirements. And so that sometimes also takes a little bit depending on what they're asking. Okay. So these two situations are in a very tight crunch time. So I feel like people sometimes have this misconception that everything is instantaneous. We get funding conditions. It takes a little bit to gather those conditions. We get funds and we release it to record. It takes a little bit for time, not a long time. I'm not saying that it's a long time. A little bit to rerun the property to make sure nothing has new popped up. The most common thing that does pop up on date downs is property, like unsecured property taxes or supplemental taxes, depending on the time of the year, that have not been paid or were recently issued. So those are the most common things. And so we can't move forward until we know that whoever the case may be, and it's most likely going to be the seller, is agreeable to pay whatever comes up. And until we get that validation, we cannot release it to the recorder's portal. And then recording timelines. This has been a huge issue. I don't know, Linda, how long do you think? Maybe a handful of months. It's been an issue where I don't know what's going on with the recorder. If anything, it seems, this is just a rule of thumb for Fresno Recorder right now. If anything's released after 12 o'clock, it just seems like it sits in their portal. Last Friday, I didn't get a recording confirmation until 6 o'clock at night. Unfortunately, I had 3 of them. I got 2 out of the 3 recording confirmations at 6 o'clock at night. The funny thing about it is the third one that I did not get until Monday morning was submitted before the other 2 were submitted. So we don't know what's going on. We submit these recordings in a timely manner with plenty of time to get recorded. And they're taking forever to get recorded, or when they finally get rejected, we're not getting the rejection until after 4 o'clock. Our cutoff to be able to submit something in hopes that it gets on record is 3:30. But right now, I just needed everybody out there to know that our hands are tied. We just don't know what's going on. We've written letters. We've been try to be proactive. We've screamed on the top of rooftops. So just know, for whatever reason, in our industry right now, the recording times is just, it's difficult. So hopefully things get released before noon and you're smooth sailing. Standing watch, protecting your property after closing. We hope that you never have a claim. So these are a little bit of some statistics. Our reserve of $1.7 billion gives us the ability to handle claims in the future. Okay, so we've been a company with, was it 175 years, Jennifer, that we've been here?
A little bit longer.
Okay, so we're good. So again, we're human, things happen, whatever the case may be, but we are solid and we are here to support any claims that are valid, obviously. The title insurance does protect the policyholder against any challenges, ensures the ownership to the property, and anything that it protects them against anything that may have happened with past owners. I'm not going to read this to you. If you want this, contact your sales reps, but 21 reasons for title insurance. This is kind of good to know, because there are clients out there, there are consumers out there that believe that they do not need title insurance. They're like, oh, I don't need it. I don't need to pay for it. There are misconceptions that sellers think that since they received title insurance when they bought it, that they don't need it to sell it. But this is a good list to read over, to have handy when you have clients that says, I don't need title insurance. And then this is something new on the horizon that just came out this year, property monitoring. This is completely different than what I think there's a lot of, and Linda can chime in on this, but things that are being said out in our industry, but this is completely different. It monitors your property after we close and sends you alerts if there's any activity that has anything to do with your property.
And if it pops up into MLS. So the conflict that we've had is our competitors have just said, well, they can just go sign down at the county for that, right? Yes, you can. And the county will do it, but they're not going to watch the MLS. We are going to alert you. I've had 2 instances already where people have questioned things that have happened. One was a legit, and the second one was posted to they got the notification and it was the wrong property. So I helped them fix that. And so it is a good thing. It's a really good thing. And it's now forwarding on every buyer that closes at Chicago Title. There.
So we will open it up to any Q&A. We know we've gone a little bit over, so we 100% respect if you need to go. At this point, we will be sending out the recording to all registered people and attendees. And then if you want a copy of the slides, all you need to do is reply to that email when we send out the recording. We don't like to send them as an attachment when we send out the recording to everybody because it tends to hit firewalls and things like that. We have some delivery issues. And if you need any of the documents that we mentioned or guides or marketing material, reach out to your sales exec or to myself, but we'll open it up for a brief Q&A with Anna. And we want to say thank you from all of us at your Chicago Title crew. So you're welcome to unmute and ask your questions.
I'm that good that nobody has questions.
I know, you covered it all, Anna. Well,
I actually
then
have a question that doesn't have to do necessarily with this, but are you guys seeing any new fraud? I know we have the land, the vacant land that the owners are absentee owners. And we're careful about that if we get anybody wanting to sell vacant land. But are there any other things we should be keeping an eye out? Kind of alert.
I do
Nothing
think
new.
people don't realize how prevalent wire fraud still is. And I know we feel like we're beating it to death, but people continue to get more and more creative in their attempts to divert funds and hack into emails and send signals on things asking for money. And it's just it's a huge concern still.
People have changed our signature lines and things like that. That is why I know our team here calls to verify.
I always share the story one of you guys shared about somebody not following your guidelines and instructions and having their money unfortunately stolen by somebody. So you've given me a great tool to warn of why they're going to be asked to hop through hoops. So, okay.
Yeah.
I have that.
Thank
I
you.
have the vacant property. Anything else? We're a line of defense for our people too.
Hopefully you have perfect relationships with them, Lori, so that they trust you enough that it's not you if it's not you, you know?
Right.
I mean, we do our best. I think the monitor in here is like something that is, I'm so proud to work for Chicago Title because of the monitor in here and now the clear. We're doing everything we can in our power to stop this from happening. So even the letters on the vacant land going out or vacant properties going out on FedEx, if they don't get them, they don't get them, right? So here's one more step to try with the clear. So I'm very proud of that.
Right. And to the extent that if we don't get an answer on those letters that we send out, we have to treat that as if there might be a problem and work with you and resolve it and continue along that path. So, and you guys can utilize the same practices that we do. If somebody is sending you an unsolicited email, about an urgent need to list a property or pay cash for a property and have a quick close, and they're hiding behind email and they're not open to phone calls, or you can't get any visual on them, then there's a chance that they may not be a legitimate player or a legitimate buyer or seller. So just keep your spidey sense up as well. All right, I think that's everything. So thank you again so much for joining us today, and we'll look forward to seeing you on future classes. If you have any questions on this or any other matters regarding title and escrow, we are 100% here for you, and smooth sailing ahead.
Bye, everybody.
Hoorah.